It's that time of the year again. However, this year, taxpayers have had an additional month to reconcile their books of accounts and claim pending ITC or input tax credit, as the government extended the deadline for pending ITC claims from September's return period to 30th November of the next financial year or annual return filing date, whichever is earlier. But that doesn't mean that you have time until November 30th to claim ITC, because you can claim ITC only in GSTR-3B form, the deadline of which is 20th November for monthly filers. This means that you have very less time. So buckle up. Let me now tell you all the important things to keep in mind while filing October 2022's GSTR-3B return. October's GSTR-3B return is the most important 3B return of the year, as it is the last tax period where you can claim pending input tax credit or ITC or rectify any incorrect ITC from the previous financial year, especially if you're a monthly filer. Hence, for taxpayers, the GSTR-3B of October is a final chance to claim ITC for FY 2021-22 to decrease your GST cash liability. First of all, reconcile input tax credit for FY 21-22 with GSTR-2B. This is the most important step that taxpayers need to undertake before filing their GSTR-3B for October 2022. Reconcile input tax credit between books of accounts and GSTR-2B to find out if there has been any kind of unclaimed or mismatched ITC in any tax period in FY 21-22. Also, reconcile input tax credit in GSTR-3B with GSTR-2B of every month in FY 21-22 to find out if there is any unclaimed or mismatched ITC. It is very important to undertake this step in order to comply with Rule 36 Sub-Rule 4 of CGST rules, where taxpayers can avail ITC only if invoice is appearing in 2B report. Secondly, to claim any ITC that was missed out during the financial year. And thirdly, to detect any ineligible ITC that was claimed and reverse the same in order to avoid notices and penalties from the department. Number 2. ITC from the GST credit notes pertaining to financial year 21-22 has to be reversed. Where taxpayers have been issued credit notes against any invoices for FY 21-22, it should be ensured that such ITC has been reversed accordingly in the relevant tax return. Now, if there is any ITC that is yet to be reversed pertaining to FY 21-22, then taxpayers must undertake such reversals and account for the same in October 2022's GSTR-3B return period. Hence, taxpayers need to ensure that all credit notes for FY 21-22 have been duly accounted for in their books and also ITC reversed wherever applicable. Number 3. Comply with the reverse charge mechanism rules and claim ITC for FY 21-22 wherever applicable. Another very important point that taxpayers must note before filing October's GSTR-3B is that all reverse charge liabilities for the financial year 21-22 needs to be accounted for and reported in GSTR-3B. Likewise, if there has been any unclaimed ITC on reverse charge basis for FY 21-22, then now is your last or final chance to claim it. Number 4. Reverse input tax credit as per CGST rules 42 and 43. This is for taxpayers supplying goods or services that are exempt under the GST law. Such input tax credit will need to be reversed in accordance with rules 42 and 43 for FY 21-22. For the unversed, Rule 42 governs the restriction on ITC that can be claimed by the business based on supplies used partly for business purposes and exempt supplies. Rule 43 governs the restrictions on ITC in respect of certain capital goods based on the supplies used partly for business purposes and exempt supplies. Any short or excess reversal of input tax credit will need to be reported in GSTR-3B for the month of October 22. For short reversals, the same can be adjusted now along with applicable interest. I hope you have found our video useful until now. If you have, then please do type yes in the comment section below and hit the subscribe button. Number 5. Compliance with new Table 4 rules in the GSTR-3B form. Moving on, the government has recently issued a clarification that applies to GSTR-3B returns filed from August 2022 onwards. Hence, when filing the GSTR-3B for October 2022, it is mandatory to report data in Table 4 of the GSTR-3B as per the new reporting norms. First and foremost, taxpayers are advised to report all non-reclaimable reversals of ITC in Table 4B1 of the GSTR-3B. This includes ITC reversed as per Rules 38, 42 and 43 of the CGST rules and Section 17 subsection 5 of the CGST Act. In brief, let me explain what these rules entail. Now, Rule 38 talks about restrictions on ITC availed by a banking company or financial institution. Rule 42 talks about restrictions on ITC that can be availed by a business based on supplies used partly for business purposes and exempt supplies. Rule 43. Restrictions on ITC in respect of capital goods based on supplies used partly for business purposes and exempt supplies. Section 17 subsection 5 talks about ineligible ITC. Next, all reclaimable ITC reversals are to be reported in Table 4B2. Examples of ITC that can be reversed include Rule 37, ITC that has been restricted due to non-payment of the sale consideration within 180 days. Section 16 subsection 2 clause B, ITC that has been restricted as goods were received in the following month or services have not yet been rendered. Section 16 subsection 2 clause E says that ITC that has been restricted as supplier has not paid their GST dues, credit notes that have been auto-populated. Now, you can use this section to also report any ITC availed in Table 4A in any previous tax period due to a clerical or other inadvertent error. Next, any ITC reversed under Table 4B2 can now be reclaimed in Table 4A5 in the return of the appropriate return period. The breakup of such reclaimed ITC will need to be mentioned in Table 4D1 in the same return. Finally, ITC not available in GSTR-2B of the taxpayer should be reported in 4D2 of Table 4. Now, for instance, ITC will be restricted by Section 16 subsection 4, that is ITC reported after 30th November of the following financial year or after filing the annual return in GST, whichever is earlier. Further, ITC can be restricted due to place of supply not being the same as the recipient's state, that is, tax on hotel rooms in another state. Number 6. Complying with Table 3.2, reporting for B2C sales. The government has issued a new clarification for taxpayers with regard to Table 3.2 reporting for B2C sales, and taxpayers must ensure compliance with this new requirement in October GSTR-3B returns. Please note that this new change has been applicable from the July 2022 return period onwards. According to the clarification, taxpayers must report all interstate B2C sales by classifying them based on the place of supply in Table 3.2 of the GSTR-3B form. Also, taxpayers must report sales to composition taxpayers or UIN holders in the same manner as above. First, taxpayers should report their interstate B2C sales invoices as well as their amendments in Tables 5, 7B or 9 or 10 of the GSTR-1. Thereafter, they need to be classified based on place of supply in Table 3.2 of the GSTR-3B. Likewise, invoices raised for sales to composition dealers and UIN holders, including its amendments, filled in Tables 4A or 4C or 9 of GSTR-1 must be referred to for reporting values in GSTR-3B. The government has now mandated this new change for GSTR-3B reporting in order to allocate tax revenue to relevant states. Number 7. Updating the new Table 3.1.1 for e-commerce sales. Recent update with regard to GSTR-3B form that taxpayers need to note while filing October's GSTR-3B return is that the government has inserted a new Table 3.1.1 in the GSTR-3B form. Now, this is to report e-commerce sales made under Section 9 subsection 5 of the CGST Act. Section 9 subsection 5 applies wherever the e-commerce operator is required to pay tax on behalf of the seller. All e-commerce operators must report sales on which they deposit tax in clause I of this table. On the other hand, e-commerce suppliers or e-tailers must report sales in clause 2. Please don't report such sales either as the operator or as a seller in table 3.1 clause A of GSTR-3B. Are you overwhelmed by the number of GST reconciliations to be undertaken, reporting to be done, and new rules to be adhered to? Well, worry not, because Clear is here. It is India's most trusted GST solution and offers users a host of exclusive features. With Clear Tax GST, you can connect with hundreds of ERPs and import data error-free. File all returns from GSTR 1 to GSTR 9C and many more, made at least 3 times faster. Match over 6,000 invoices in less than a minute and detect 100% tax credits with AI-powered matching. Get 2 to 7% tax savings with smart reconciliation and reports. Get multiple validations done at every step, reviewed by over 60 experts, and a variety of smart analytical tools and reports available on tap, and many more. If you would like to get a demo of Clear GST filing software, please click on the link given in the video description and enter your contact details. One of our product experts will reach out to you and schedule a demo at your convenience. We have now come to the end of this video. I hope you found this video useful, and if you did, then please support us by subscribing to our channel. Also, please don't forget to click on the link given in the video description to explore the Clear GST solution for a quick and error-free GST return filing experience. Thank you.